Thank you for joining Market News with Rodney Lake. This is a regular program for the GW Investment Institute, where we talk about timely market topics. I'm Rodney Lake, the director of the GW Investment Institute. Let's get started. Welcome back to Market News with Rodney Lake. I'm your host, Rodney Lake. Today's episode, we're going to go over a company. Reminder, this is a GW Investment Institute podcast. This is for entertainment and educational purposes only. We're coming to you from the George Washington University School of Business, Duquesne Hall, Duquesne Family Studio. Shout out to the Duquesne family. Thank you very much for our fabulous studio. All right. What company are we going to talk about today? Of course, there's tons going on in the market. We'll talk about that in another episode. But we're going to today tackle a company as we do, and we use the BMPB framework, Business Management Price Valuation Framework, which the Institute uses for our fundamental classes and our students use for our fundamental analysis classes. And even some of our quant students build models that have some similarities, like quantum mental models, that they might use to use fundamental and quantitative together. But today we're going to go over Taiwan Semiconductor, ticker is TSM. We own this in some of our portfolios. Again, disclaimer, not investment advice, educational, entertainment purposes. We certainly hope we're entertaining only. Certainly subscribe to the channel. Thanks to the people who come back to watch us on YouTube and listen in to the podcast, Apple, Spotify, Amazon, wherever you listen to it. Thank you very much. Send us some comments. Send us some questions. Let us know. Maybe there's a company that you would like us to cover. We'd love to hear from you. We'd love to hear topics that you might want to talk about that are related to the market. Of course, related to investing. You should be thinking about how do you become a better investor, a better analyst, better business person. That's what we're trying to do. And that's the kind of content that we're trying to deliver to our crowd. All right, we're going to go over Taiwan Semiconductor. So a quick, what's the business? So this is a manufacturing of semiconductors, and it is an outsourced manufacturer. So this helps people like Nvidia, people like Apple do the manufacturing of their chips, but Taiwan Semiconductor does not then compete with their customers. So what does this mean? So they have this manufacturing facility. They're an outsourced manufacturer, so they have the fabrication facilities. Many of those are in Taiwan, and there's the geopolitical concern around that, but they're moving some of those to the States, and some of those are being built right here in America, in Arizona, for example. So that's that transition of moving some of that manufacturing from Taiwan to the U.S. and Japan is happening, is underway, and they produce for many people. So anyone that doesn't have their own fab, so Intel would be really the only other big competitor that makes their own chips that has their own fab. Taiwan Semiconductor is, has clients across the board: Nvidia, Apple, Microsoft, anybody that needs chips made, Tesla, they can be potentially being built at Taiwan Semiconductor. Now, one of the things I'll mention about Tesla, they're building this TeraFab, and I think that's going to be a very interesting thing to watch. And so if you look at who has manufacturing capabilities, certainly at the car level, and Optimus robot that's coming, Tesla has manufacturing expertise there. And now they're going to be deploying manufacturing expertise in the fab world for semiconductors. So as a student of the industry, I think it's important to watch what Tesla is doing, watch what's happening with the TeraFab. They just made some of these announcements. That is a partnership between Tesla, SpaceX, and XAI. So I think you should absolutely, if you're interested in this, in the space, pun intended, really check out what the TeraFab is and what it's doing. They've made some preliminary announcements, and there's things online that you can check out. But, back to Taiwan Semiconductor, again, they outsource for this, for all of their clients, and they don't compete with their clients. So I think this, in the business model, when you talk about Taiwan Semiconductor, their business model is that they don't compete with their clients, and so they don't make their own chips. And so you don't see that. Now, one of the things, and this is not about ARM, but ARM is now building their own chips. And so ARM has architecture that they allow people to use, and that has been the business model. But now they have started to get into the manufacturing of their own chips, or producing of their own chips, not the manufacturing, but the production of their own chips. And so there's a divergence there from what they had done in the past to what they're doing now with having their own chips, where you can kind of say, well, they could potentially be competing with their customers. And so I think that's an important distinction, and I think it's important to think about, when you think about the business model of Taiwan Semiconductor, that they're not competing with their clients. And so Apple can send them their latest gen and not worry about, okay, well, is Taiwan Semiconductor going to hijack some of this? Or are they going to, incorporate things that they maybe shouldn't? They don't have to worry about that. And not to say that these other people are going to do that, but certainly you take out that concern and it's a very different setup. So let's get some stats on the company for the business. $1.75 trillion market cap for Taiwan Semiconductor. So this is a very large company. And again, lots of people use this company, all the big names that you would know about. All right. So now let's get in to some of the revenue numbers here. So if you think about what's happening on the business side, so revenue, $122 billion for the trailing 12 months through December, and that is their fiscal year, so 2025 December. And where has that been over the past? So that grew 36% just over the last year. It was 90 in 2024, 69, which is a 33% increase for that year, and then 75 in 2022. And so you go from 22 at 75, then to 69, then to 90, and then to 122. So pretty significant growth. And then the expected growth for next year, also very high. And so when you talk about what's happening in the AI boom, are these numbers going to be sustainable? Well, the 2026, the end of this fiscal year, 12/31, you're talking about $157 billion is the consensus estimate. That's nearly a 30% growth rate. That's 28.4%. And then if you think out 27, okay, what's the number there? 195 billion, and that's 24% from the 2026 number. So you're talking very significant growth rates. And really, if you look back, it's more than double just since 2022 for the 2027 number. So these are very significant numbers. All right, now let's talk about what's the gross margins here. So we talk about the gross margins for a lot of our companies, and you look at that over time. What's been happening? What's the gross margin for the 12/31/2025 number? Well, that is 59%. So this is definitely towards the elite category, especially for a manufacturing company. Having these high gross margins is pretty significant. And obviously, it means they have something called pricing power. Shout out to Overlook and Richard Lawrence. If you'd like to check out somebody that has reviewed Taiwan Semiconductor, you can Google around and look for Overlook and Richard Lawrence. Shout out to him. Absolutely. I've learned personally a lot from Richard. So thank you, Mr. Lawrence, for that. And Overlook, I think, is a fabulous operation, not investment advice. But I think they do a nice job. And if you look up some of the stuff online, I think Mr. Lawrence has done an excellent job talking about the pricing power that Taiwan Semiconductor has, because the nature of their business, the nature of their business model, the fact that they stay on the very high end and they have the most advanced technology when it comes to building chips, and the 5, the 4, the 3, the 2 nanometer, all that stuff. They're the leading edge of that. And by the way, they don't just come up with a demonstration; they come up with manufacturing at scale, at production. That is super significant. A big difference between building a prototype and having really manufacturing at scale. And they can do that, and they can do that on pace with their clients. And so I think it's a huge benefit, obviously, to their clients. And so now let's look at the gross margins just quickly over time. So you talk about 2022, it's 59 again, 54 and 23, 56 and 24, and we mentioned about 60 here, and the 2025 number. So really steady, really high gross margins over time. So very good there, very consistent. And again, leads to somebody to think about, okay, well, how can they have these sustained high gross margins in a manufacturing business? Well, they must have pricing power, and they absolutely do. All right, so now let's talk about what's happening on the net income line. So $55 billion. And what's the gross margin for 2025? Well, that is a 45% net margin. So that is a fabulous net margin for a manufacturing company. How has that been over time? Well, if you look back in 22, that's 45%, and then 38%, and then 40% up to 24%. And then 45% again this year. So it's accelerating, and it looks like it's going higher. So the expected net income for 2026, consensus number is $73 billion. That would be 46%. And then $90 billion in 2027, another 46%. So the consensus numbers are massive and really good. So, all right, how would we rate this business? The last thing we'll talk about before we get the rating is the free cash flow. So what kind of free cash flow does a big manufacturing business like this produce? Well, the 2025 number, after investing $40 billion of CapEx, you're talking about $34 billion in free cash flow. So very good there. This is a fantastic business, and projected those numbers are projected to grow, and CapEx projected to grow. So not the $200 billion that Amazon is putting in, but $52 billion this year for 2026, and expected $60 billion. Obviously, these are big operations, but still, and the 2026 expected free cash flow $43 billion and $60 billion accordingly. So all right, when we talk about that, okay, well, the business rated very high. Like, this is a fabulous business. No concern here. Obviously, if you think about who is benefiting from this, these are fabulous gross margins, fabulous net margins, a business that's in demand, a great business model, pricing power, really, coveted clientele and customers who come back because they really appreciate them being on the cutting edge and have been. Now, the risk is, okay, they're moving their manufacturing, having it so concentrated in one location in Taiwan has been a concern. They're moving some of that. So that's getting de-risked some, not all. However, I think they're absolutely making progress in the US and Japan there, so we'll see how that plays out. I think important to pay attention to that. That said, what's the score here? I'd still give it a 9. All right, on the business side, 9. Now, currently, Dr. Che Wei is the CEO, and this business has been, really a fabulous business for a long time, and I think you got to give high praise to the management. We won't spend a lot of time here, but I'm probably also giving the management a 9 here. And so, really fabulous management. If you look at the net and the gross margins and the way this business has been run, I think that is fantastic. And I think to give the management some credit, the capital allocation, if you think about them staying at the cutting edge and not losing focus on making sure that they don't compete with their clients, that they have the cutting edge technology and they keep investing for that, and not certainly not over investing in my mind, but really making sure that they're investing properly and that they have the most advanced setup for their clients and customers, and they keep doing that. So shout out. I think also a 9 on the management. Now, the price versus valuation. All right, now here, you could say, okay, well, what's the forward? About 23 times. That's certainly not expensive. But if you compare it to other competitors, that's much lower. And obviously, you're getting maybe some discount because of the geopolitical risk for the location concentration for the manufacturing piece. But you're not overpaying at this point. Dividend yield of 1.13%, if you want to think about that as incorporated into you're getting some of the cash out of the business and the capital allocation connected to the management there. But on the forward PE, certainly not overpaying. But okay, well, factoring in the risk here, maybe we'll ding this a little bit, and it's probably not a 9 on the valuation, but between a 7 and an 8 on the valuation. So now we're quickly moving through the components here, but I think it's worth mentioning now the balance sheet, and I'm going to come back to the business a little bit before we finish up everything. All right, so coming back to the business in a moment and going with the balance sheet right now. So if you talk about the balance sheet, all right, what do we got? We got $97 billion. This is through 12/31/2025, and the cash is at $97 billion, $33 billion in debt. So your net cash position, let's say 60 plus million here, 60 plus billion, excuse me. So you're sleeping like a baby at night. Nobody's worried about this. And if you're thinking about, okay, well, is there anything we should be really concerned about? Not really. I mean, I don't think, you have the big CapEx numbers, but you still get the free cash flow. So you're not really worried about that. And I think for the most part, this is a balance sheet that, again, you can sleep like a baby at night. So I think this is a 9. All right. Now, I want to come back to the business. So what we've rated so far, we have the business as a 9. We have management as a 9. And then we have the price versus valuation. You could say 7 or 8. And the balance sheet at a 9. So, all in all, you could shift some of these scores around. But you're still looking at a company that's overall an 8.5, certainly a solid 8 for the composite score. But now, I want to go back to the business a little bit. And so some of the people are concerned about what's happening on the business side. First, let's tackle some of the geopolitical risk. Of course, there's a lot happening around the world. And right now, the focus is really in the Middle East at the moment. Now, some people are using that as, okay, is this a proxy for other things that could happen in the world? And should we be concerned? I think you always have to pay attention to what's happening, and you got to think about what's the risk management here. But when you're thinking about the business, I think, again, and this is why I want to emphasize back to the business, pay attention to what is happening on the TeraFab for Tesla, SpaceX, and XAI. I think it's important to pay attention on what progress that they're making, and it'll give you sort of a strength of the manufacturing business for Taiwan Semiconductor, and I suspect that will be very strong. But I think Tesla will be a formidable manufacturer. They already are in other areas. That said, I think it's also important to watch what's happening with the transition and how much of the production and operation is getting moved out of Taiwan, and how much as a percent is getting produced in other places like in Japan and like in the US. And additionally, paying close attention to what's happening with what is the highest end piece of that manufacturing. And so right now, the highest end pieces still remain. So the most advanced technology still remains in Taiwan. And I think it's very challenging when you build a system like that, when you build such, historically a great system within Taiwan and having that manufacturing base there. I think it's super challenging to just say, well, you're going to replicate that in Japan, you're going to replicate that in the US in a very short period of time. So I do think that's a challenge. Now, I do think that seems to be happening, though. And I think over time, you're going to see that manufacturing prowess be exported to Japan, being exported to the US. But I do think, that doesn't happen in 6 months. It doesn't happen in a year. But can it happen over 3 to 5 years? Absolutely, for sure. And then if you're thinking about the business from a geopolitical risk, that starts to dampen that geopolitical risk. And so, it's hard to be above a 9. Obviously, there's only one spot to go to a 10, but you can maybe you rate the business down a little bit lower because of that. Maybe it's not a 9, maybe it's an 8. And again, but the composite score you could shift around, but you could absolutely say this is somewhere between an 8, 8.5 overall for the composite score, depending on where you want to put the business, and certainly depending on where you want to put the valuation. I think management is an absolute 9, and I think the balance sheet is a 9, possibly a 10. When you talk about the free cash flow in the business, the capex budgets being very reasonable, and certainly being able to handle the capex budgets and have free cash flow from here. Just as a reminder, when we talk about that, you're talking about for 2025, the capex budget is $40 billion, almost $41 billion for the 2025 fiscal year. Again, 12/31, 52 expected in 20 for the full year this year, almost 53, and then about $60 billion in 27. And each year, you still have significant free cash flow, $34 billion in 2025. That's in the books. Expected $43 billion in 2026, and then expected $60 billion in free cash flow in 2027. So, obviously, these are big numbers, and it's a manufacturing business. But when you still have very good free cash flow, it's not a huge concern. And if you look at it, it's kind of balanced. And so this year, they're going to put 2025, they put in 40 for CapEx and 34, nearly 35 billion in free cash flow. And then in 2026, for the full year expected this year through 12/31, you're expecting 52 billion in CapEx, nearly 53, and 43 billion in free cash flow expected. And then it's even more balanced in 2027, where you're expecting 60 billion. So the numbers are going up there, but then expecting about 60 billion in free cash flow. So really not a concern on that front. But again, re-emphasizing understanding the business here. So again, shout out to Overlook and the work that Richard Lawrence has been doing over the years. He's been a long-term shareholder of Taiwan Semiconductor. So praise goes to him for being onto this idea earlier. I think it's worth spending time as an investor, as a business person, as an analyst, to really understanding pricing power. We've talked about that before, and I think Taiwan Semiconductor is definitely an example of that. Now, I think some of that's built into their business model, thinking about, okay, well, why do they have a good business model, and why can they have these high gross margins and high net margins being a manufacturing company? Well, I think it has to do some of their business their business model, and obviously on the execution. Everything is execution. We can all have good ideas, but if you can't execute, it really doesn't mean anything. And so I think that's super important. So when you're thinking about Taiwan Semiconductor, I encourage you, if you're going to do analysis on this, remember, non-investment advice, educational entertainment purposes only, it's important to think about, well, how can they produce such high net and gross margins on a manufacturing business? Well, their business model, not competing with their customers, reinvesting and making sure they're staying on the cutting edge and delivering the best products for their clients, and then not competing with them. I think that's super important. And then making sure that you never, ever let your foot off the accelerator. And so far, they have not. And so I think it's important to think about that. And there's lots of stuff you can learn about the history of the way that they started. And I think Morris Chang is the person who started this business when I think he was about 57. So very interesting past there if you want to spend some time. We've mentioned that in prior episodes. But really foundational to their success is this idea that they took and said, hey, we're going to be the manufacturing arm for all of these fantastic companies. They did it at the right time. They came up with a fantastic business model. They haven't changed that business model. They continue to not compete with their customers. Their customers then rely on them to do this manufacturing. Obviously, Nvidia being one of the most notable, Apple being another very notable client here. And when you have these fantastic clients and you're not competing with them, they're likely to keep coming back. Why would Apple want to start manufacturing their chips? Why would Nvidia want to start manufacturing their chips if they have a great partnership with Taiwan Semiconductor, and they feel like they're getting a good deal, they're getting what they need out of this, and they can then focus on their business. So, Apple obviously, designing their products, and Nvidia the same thing. and also them staying on the cutting edge to make sure that they're delivering for their clients. And so if you look at this self-similarity, piece of fractal geometry here, if you look at this self-similarity, these two components fit nicely together. So, can they lose some clients? Can you have some additional competition? Again, I think it's important to pay attention to what's happening on the TeraFab. That said, I think, again, fabulous business. Keep paying attention to what's happening. The geopolitical risk is something real, and I think it's important to pay attention to follow that. But again, business still giving it a 9, management 9, price versus valuation. We can even say 7, 8 there, 9 on the overall balance sheet, and then that gives you basically, depending on where you want to put some of those, you could push them up or down a little bit, especially on the price versus valuation. That gives you, and you could do it a little bit on the business because of geopolitical, but you're a solid 8.5, let's say, for the composite score overall. So very good here. What are the things to watch? Watch the geopolitical risk, making sure that they stick with their business model, making sure that they stick with staying on the leading edge, make sure management is allocating capital properly and reinvesting in the business, making sure they have free cash flow. And obviously, can they get that manufacturing prowess out to Japan, out to the US at the highest, end of the spectrum for the tech? I think you have to watch for that. But overall, very good. Again, not investment advice, but in our portfolio, our students will be pitching at the end of this semester. We're really excited to hear what they have to say, and maybe some of it will be about TSM. But looking forward to that, and we look forward to seeing you on the next episode of Market News with Rodney Lake. Thank you very much. Disclaimer, the content shared in the GW Investment Institute podcast is for informational and educational purposes only and should not be considered investment advice. The opinions expressed in this podcast are those of the host and guest and do not necessarily reflect the views of the GW Investment Institute or the George Washington University. Listeners should not act upon the information provided without seeking professional advice from a qualified financial advisor. Investing involves risks, including the loss of principal. The GW Investment Institute, the George Washington University, and the podcast hosts do not assume any responsibility for any investment decisions made based on the content of this podcast. Always conduct your own research and consult with a financial advisor before making any investment decisions.